Hey guys, and welcome back to my channel. Welcome for the first time. So if you're here for the first time, my name is Davide Marcotti. I'm a popular investor with eToro. I was the most successful popular investor with eToro in Australia in 2020, and I still am in 2021, I believe. I didn't really check today, but going strong in 2021. And here I am today to just walk you through what I think happened in 2020 and what to expect now given the recent developments for 2021, because it's really important to understand our history, to understand our future. Wow, that was very mouthful, but hey, let's jump right into it. Okay, first thing to understand is what happened in 2020. Okay, so 2020. Okay, so markets were doing pretty well, and then Corona hit in China, and then the US markets realized that it was going to come to America, and then it came to America, and in February, March, everything was just going down. There was the markets were going crazy. There was a sell-off on every single industry, any asset, any commodity, really everything just went down. People were rushing to the dollar. Okay, people were rushing to cash because fear was traveling more and faster than the virus itself, which is pretty intense. So people were rushing to not even safe haven assets such as gold, silver, and to be honest, Bitcoin, but they were rushing to the dollar. Okay, because they were fearful, and they were thinking that they were gonna lose it all. And to be honest, I was short in the markets at the time. I put in a couple of shorts on the airlines, but not much. And then I started buying. When I listened to a podcast where basically these guys, geniuses by the way, Preston Pish and Stig Bretterson, whatever his last name is a genius. So apologies for butchering your last name, but basically these guys were saying that the Fed is basically ready to do whatever it takes in order to stabilize the markets and provide growth as well. And also it was the golden ticket for President Trump to get re-elected. So obviously he didn't want a bear market just before election time. So he had to do whatever it took in order to have a bull market. Okay, with that being said, I realized that my shorts were not good anymore. So I closed them all up and I started investing in tech stocks. Because obviously, to be completely honest with you, it was kind of a no-brainer. I mean, people are gonna stay home for the foreseeable future. And if you look at history, if you look at China, this virus wasn't gonna go away anytime soon. So for the following 2 weeks. So to be completely honest with you, I was like, yeah, okay, Amazon is gonna do well. And Fiverr is going to do amazingly well because people are going to try to find a second income, so services online and all of that jazz. But I'm not going to bore you with all of that. We all know what happened in the past. So okay, cool. So everything was just going in the cloud. Everything was going tech. So the Nasdaq saw unprecedented gains. It wasn't just because people started believing in these technology companies, but it was also because the Fed was printing trillions and trillions and trillions. Okay, so with the Fed printing trillions and they were buying up bonds. So what happens when you buy bonds? Well, the interest rates also go down. And this is also in the interest of the Fed, because if interest rates go down, then banks can borrow money at a lower rate from the central banks, and they can lend more money to the real economy to stimulate the economy, so that small medium businesses or even yourself, so retail, they take out more loans, they buy more stuff, so the economy circulates again, right? So this is to combat the crisis. Good, so interest rates were going lower also because the Fed was buying up bonds. Okay, what does that mean though? The price of bonds go up. So now that you're a retail investor, for example, or even institutional investors, you see your bond prices go up, so you're actually making money on your bonds. And you're like, oh wow, now the yields are probably close to zero, maybe 1% a year or something on those lines. So you're like, nah, I want to sell it all because I'm not making any money. So you sell it all, and what do you do with this? You probably don't even like cash because the economy was just about to go up again because the Fed was reassuring the markets. So you saw the stocks just bouncing back and you were like, oh, I want in. Boom, there you go. And more people went in, and then FOMO kicked in. So we saw a V-shaped recovery, which we've rarely seen before, right? So, but this was mainly due to every dollar that was printed by the Fed. So again, the Fed prints money, goes into the bonds, the bond prices go up, yields go down, people sell bonds, they take this money and they invest it in the stock market. So you could make the argument that for every dollar that was printed and put into bonds, it was actually taken out of bonds from retail and put into the stock market. So the Fed wasn't buying stocks, wasn't buying the Nasdaq. It was buying bonds, but then people were buying the Nasdaq and the S&P 500 and the Dow Jones. Okay, with that out of the way, we understand it. So, and that continued for a long time, okay, for a long time. But the price of Bitcoin was fairly low. So I was like, I don't understand this. Why is the price of Bitcoin going down when in reality it's a safe haven? Well, okay, maybe not as a safe haven as gold at the time people were thinking, but I was a contrarian already back then, but I was listening to these podcasts and I was doing my own research and due diligence hours and hours and hours a day. I was listening to Plan B, to Preston Fish, to Chamath, to Raoul Pal, to Michael Saylor. So I was actually doing a lot of research every single day, and I realized that Bitcoin was probably the best inflation hedge that people could resort to in order to face the increasing challenge of inflation. And I didn't understand why people were not rushing to Bitcoin and not rushing to gold. But then, and that continued for a couple of months, and then we saw an increasing rally of people rushing to gold and Bitcoin and cryptocurrencies, mainly due to the fact that more and more investors were realizing that there was going to be inflation due to the monetary supply that was increased by the Fed. I think in the last year they printed 30% of the monetary supply, so that was insane. But most investors were still relying on the CPI. And what's the CPI, you might be wondering? The CPI is the Consumer Price Index. So the Consumer Price Index is basically the index that is used in order to calculate inflation, or at least that's how the government tells you what inflation is at. And the government has a keen interest on keeping inflation around 2% because inflation is good for people that have taken out loans, for example, because $10,000 now is worth much more than $10,000 in 30 years. So when you're buying your house, for example, you're taking out a loan for 30 years, you're taking out, I don't know, $200,000. It depends on where you live. If you live in Australia, you can probably buy just a door with $200,000, but it is what it is. But yeah, so you take out this loan, $200,000 here, you buy a house, fine, beautiful. In 10 years time, with these $200,000, you buy much less than a house. And this is inflation. And the government is saying 2% is our inflation, the inflation that we want to pursue, central banks as well, or 1.5, 2%, doesn't really make a difference. And how do they calculate it? With the CPI, Consumer Price Index. How is the CPI calculated? You go to the supermarket, you put a bunch of stuff into your cart, and then that's how inflation is calculated. So it's just a bunch of stuff from the supermarket, milk, bread, and all of that jazz that you use and consume on a daily basis. So as you can probably imagine, or as you can probably tell by now, the CPI doesn't contain or doesn't factor in the price of real assets such as houses, such as the stock market. Because think about it, the price of buying a stock that was yielding, I don't know, $10,000 in dividends in 2019 was priced at X. At the end of 2020, it's very likely that X is now 2X. So it basically doubled. And has it doubled because dividends went up twofold? No, it's because of inflation. So in order to get the same amount of dividends, now you have to buy more of the stock. And this is inflation that is reflected also in the stock market and not just in the price of goods. Because in all reality, technology is deflationary. Think about your internet connection. 10 years ago, you were probably paying more to get online than what you're paying now. And you're like, oh yeah, prices haven't increased. Yeah, of course they haven't, because that's technology. Because now it can scale. The more people they have, the more investments, and the service is always the same. And because you can spread your fixed costs across multiple or more selling points, then there you go, you can decrease prices. This is just technology. You know, computers get better every year, and they get cheaper, unless you're buying Apple, whose stock is also increasing every year. And this is inflation that is reflected in the stock market, is reflected everywhere. And at the time I was thinking, okay, people will soon realize that there is inflation, and they're not rushing to Bitcoin. And that's what I did. I rushed to Bitcoin. The price of Bitcoin, which is an inflation hedge asset, wasn't going up. So that presented an opportunity for me. And that's why I heavily invested on my public profile on eToro in Bitcoin. And I still believe that there is a long way forward. And I'm making this video now to say that I think that people are waking up to inflation now because they're standing and they're realizing that the CPI is rigged and it's malfunctioning. It's not a truthful representation of inflation, and they would be rushing to inflation hedge assets. Now, everything is going down now because it's the same that happened in March and in February and March 2020. People are scared. People are scared and they're selling the winners from last year. The winners from last year was the tech stocks and it was Bitcoin and any cryptocurrency. But now you can sell as much, but as soon as the markets go back up, everyone will FOMO in again, and we're gonna see another V-shape, if you will, recovery. And more people now are approaching the market. So the old valuation models, pricing certain multiples, PE, and all of that jazz, I think I think they've lost power over time, and I think we are going to see new valuation models in the near future. So this is all to say, I'm quite surprised that the markets have just woken up to a possibility of having inflation, and they're selling off the wrong assets. So stay strong, endure this storm, and invest in inflation hedge because you'll be fine long term. This is my 2 cents.